All right, let's take a look at live examples for the continuation model. Here we are on gold, where we have two beautiful 4-hour trade hitting the TP on the zero level. So I already spoiled it for you that it will hit the TP, but it will be the perfect example that how you can utilize on the 15-minute continuation models. So let's just take a look at the 4-hour time frame first of all, where we have a bullish structure here on gold coming from this low point. Price is forming a nice bullish structure. Here this low point got swept out, and from this sweep, liquidity wipeout, it decided to break the internal high point as well as the previous external high point right here on this line. Meaning we can pull the Fibonacci from this low all the way up to this high point, and there will be the 71 level where you are setting a limit order for the 4-hour entry. That's clean. And now we are looking for price to come down to the 71 level, and after coming down, we are looking for these continuation 50-minute trades all the way up to the zero level where we can TP everything out, including the 4-hour one, the confirmation one, and the continuation models as well. So let me just switch down to the 15-minute time frame and show you what has happened right here. What we first of all see is that price reacted nearly the 61.8 level, where I told you that it usually traps liquidity. Once again, it won't be always at the 61.8 level. Sometimes it will be few pips above, sometimes few pips below, but around this area, usually liquidity trips happen. So what you see right here is that price came down around the 61.8 level, and then it impulsively created the bullish structure break to the upside, shifting the market structure from bearish to bullish. Here, for example, you can pull the Fibonacci if you really want to, because you can say that price swept out this low point, and from this low sweep, it increasingly swept out the previous high point and broke the previous high point. You could pull the Fibonacci from this low point all the way up to this high point. You could enter on the 71 level, but we are smarter than that because we know that it usually traps liquidity. And let's just see what the next movement is. It will be the sweep of liquidity immediately into the 71 level. So what we see right here is ultimately the 71 mitigation on the 4-hour external idea, and immediately the market structure shift from bearish to bullish because price swept out the liquidity, came down, created this little pullback right here, then went down to the 71 level and broke the previous high point right here, shifting the market structure from bearish to bullish with a nice impulsive bullish movement with volume. There is a little volume, but still volume that shifted the market structure. So what you are looking for here is the confirmation entry model. Obviously, you are looking for the confirmation of this overall market structure. I don't know where the retracement point will be. And I just play price forward to see what will happen right there. Yeah, here is the confirmation point on the 71 level. You can enter there into a trade, basically. And let me just play price forward that what will happen right here. What entries might come, because currently the confirmation is not mitigated, it is not tagged. But what we see right here is that price created the continuation entry model after the confirmation has been printed and has not been tagged. So what I told you in the previous theory video, that in this case you keep the original confirmation entry, you pull it up to the previous high point, and you mark out the continuation entry where price swept out the previous lows liquidity right here, broke the previous internal high on this line, and not just the internal one, but the external one was broken as well. So we have double break of structure coming from the sweep. There is a really nice amount of volume and order block. So what I told you in the previous video, that the best option you can have here is to split the risk. Obviously, that is not the only option. You can choose to only enter here on the continuation setup, because why this is a continuation? Because price did print the exact same criteria of system that we are looking for on the 4-hour time frame after confirming the 4-hour original entry model and after creating the bullish flow continuation model, because it's continuing the trend of the original 4-hour external structure, which is bullish in this case. So what I told you in the previous video is that you can have three options. First is the direct limit entry here, second is the only entry here, and the third is to enter on both of the 71 levels. You decide which one suits you the best. You decide which entry model satisfies you the most. Obviously, it will take some time for you to backtest that which one is the most suitable for you, because you will see that from the big backtesting results that, for example, if you only enter here on the 71 level, that is the most amount of profit that you can make, because yes, sometimes it will sweep you out, but if it sweeps you out, you will lose -1%. But if it tags you in, it will go up to the TP, the 4-hour TP, with full risk. So once again, it's all the question of and all the matter of backtesting that what suits you the best. But for the sake of example, let's just enter here on the 71 level, because we will only measure everything in risk to reward ratio. As I told you, the TP will the previous 4-hour high point right here, and we'll take partials on the minus 0.27 level as well, but we will talk about partial taking in the trade management video. So this will be a 9 risk reward ratio trade. If it tags you in and hits the TP, this will be a 9 risk reward ratio trade, which will be added up to the original 2.5% profit on the 4-hour trade. So let's just take a look at this, that how it plays out. Price tags you in and then starts to move up and then breaks the high point and takes you out on the partial level. Okay, perfect. Now the partial is reached and price is coming up to the 0 level. Let's just see that what price will do here. Yeah, it rejected and created basically relatively equal double taps right there, but the target point was not reached. So we are still in the trade. I'm going to delete the confirmation entry because price is way too far away from the confirmation. Now we can delete that and only focus on continuations. Let's just analyze this, that was there any type of continuation trade with sweep with anything? I would say no. This didn't really sweep out the previous structure, no sweep right there on the movement to the upside. So no, we cannot scale into the continuation entry model because it's not present. And this is really important, not force the trades, because with this 15-minute model or models, most likely when you start to trade these models, you will be forcing trades. But sooner or later, you will realize that no, this is just like the 4-hour model. You have to stay patient, wait for the right opportunities to come. And once those are there, you can take and grab and pull the trigger. But not every time. You have to learn that you don't want to force the opportunities. You don't want to title everything as a break. You don't want to title everything as a sweep. You just have to calm down and wait for clean opportunities, like for this. Sweep of the previous market structure, break of internal, break of external with clean high volume and an order block. Beautiful entry opportunity. Here, this is uncertain price action. You want to make sure that you are not taking those bad trades. You are not forcing yourself. You are not going FOMO. You are looking for the right opportunities only. So let me just play price forward at what will happen here in this region. Currently, price is inside of an external 50-minute structure. Like here is the external low point, external high point, and it's ranging in between the two external points, low and high. Target point is not reached still. Let me just see that what will happen here. Yeah, price is still inside of the external. And now what has happened is that price swept out the liquidity of this previous low, just like it has happened here. There is a beautiful sweep of liquidity. And from that sweep of liquidity, price decided to break many internal high points, including basically every single one of the internal high points right here. What I told you in the theory video, that these setups are takeable, right? You can pull the Fibonacci from this low to this high point, and these setups are takeable because you are inside of an external 50-minute structure, but basically it is the confirmation. It is confirming the original idea. How you can measure the strength of this internal setup is that you pull the Fibonacci from the external range, and if the internal confirmation, internal setup, which is also a continuation, happens around the 71 level of this 50-minute external range, then you are good to go. You know that it's closer to the 71 level, the better it will be. The more far away from the 71 level, so for example, if it would have happened here, the more far away from that 71 level, the worse it is. It is still takeable, everything is takeable, but I'm just telling you the probabilities. So here, for example, price confirmed the 71 range on the 50-minute time frame, the external range. There is a sweep, there is multiple breaks. This is the highest point of the break. Basically, broke, volume is there, really nice volume candle once again, really nice order block is there as well. So what we do is that we can set a limit order on the 71 level exactly right here, moving the stop loss to this low point, target will be the same external high point on the 4-hour level. Obviously, pair shows on the minus 0.27, and this will be a 6.5 risk to reward ratio trade. Let's just see how it plays out. Yeah, we have to modify the Fibonacci a little bit, just like this. Yeah, it moves there. Let's just see how it plays out. Yeah, there is the tag, and price skyrockets to the upside, and tip is out on the 9 risk reward ratio trade, tip is out on the 6 risk reward ratio trade, and tip is out the original 4-hour entry for 2.5% profit. So you can see the strength and power of all these confirmations, of all these continuation entries. But here's another thing. That's why this gold trade is a perfect example of what I showed you in the theory, because you can see that price also swept out a low point right here. There is a clean sweep, just like it has happened here and here. There is the exact same clean sweep, and from that sweep, there is the exact same clean volume break of the internal and of the external high point as well, and as well as the 4-hour high point, right? So as I told you, these opportunities from this low point to this high point are takeable. But here's an important thing, that you want to TP this out on the 0 level. You don't want to let this run to some 4-hour random point that you randomly find on a chart. No, you want to TP all these trades out, which are above this 0 level here, on the 50-minute 0 level. So here is a trade, sweep, clean break, volume, order block, clean break it here as well. Here is a beautiful trade. Let's just see. Yeah, we just have to modify this Fibonacci a little bit, but there is ultimately another entry that I told you is takeable, but has the lowest chance to hit the TP. But if you consistently take all these entries, in the end, it will be profitable. So you are only targeting this high point for 2.4 risk to reward ratio, just like on the 4-hour time frame. Let's just see what will happen right there. Price is moving, still moving, and hits the target point for another 2.5 risk to reward ratio profit. And this is the power of the continuation entries.